morning and welcome to the LNG Marketplace Weekly News Flash. Here is the latest news we have selected for you from all over the media. 2020 was supposed to be a breakout year for U.S. LNG export projects getting commercially sanctioned. But as 2020 looms, developers face significant headwinds, including depressed global gas prices, oversupply concerns, and the still unresolved U.S.-China trade war. This we read on S&P Global Platts. According to Hellenic Shipping News, it is unlikely that final investment decisions on additional global production capacity could increasingly move ahead without being connected to long-term contracts with end users. There are rising expectations that the market will continue to shift risk from the buyer to the seller, and that the new deals will be shorter, more flexible, and even include exit clauses in case the market changes dramatically during the contract term. However, the biggest reason why gas is likely to remain the cornerstone of our green economy is, ironically, the same reason why many investors are fleeing for the hills: low gas prices. The bigger picture is that deep structural changes, including new technology, continue to lower break-even costs, making it economical for drillers to continue production at prices that would have put them out of business just 5 years ago. Thus, gas prices have been very competitive vis-a-vis other energy sources. This is stated by oilprice.com. LNG is no longer a sideshow for the biggest energy and commodity traders. Gunvor, the biggest independent trader of LNG, as well as Trafigura, Glencore, and new entrant Mercuria, all reported soaring volumes this year. The trading companies know better than most how to navigate the logistical challenges in a market and come up with new ways of making money that include cargo swaps, holding back on deliveries, and trading oil-linked cargoes against spot tankers. This article we have found on Bloomberg.com. According to RT.com, Russia has already notably outpaced the United States in terms of LNG supplies to Europe, while 3 years ago practically did not supply LNG at all. Puerto Rico should be on the minds of most LNG exporters in the U.S. due to its expanding gas demand and the proximity of this island to U.S. mainland. However, the Jones Act prevents the trade as it requires that all goods transported by water between U.S. ports must be carried on U.S. ships. Due to the lack of U.S.-flagged LNG tankers, almost all imports come from Trinidad and Tobago, and in 2 cases even from Russia. Renting or buying ISO LNG containers and sending their LNG to the island on available U.S.-flagged container ships could be a workaround for this issue. This interesting piece of news we have found on naturalgasworld.com. Pavilion Energy Singapore and Total have signed a 10-year agreement to jointly develop an LNG bunker supply chain in the port of Singapore. The cooperation includes the shared long-term use of LNG bunker vessel new build that will allow each party to supply LNG bunker to its respective customers. This we read on Hellenic Shipping News. Thailand has called off a plan for its state-run power producer to import long-term LNG from Malaysia's Petronas. Instead, Thailand is now preparing to receive LNG import in a spot market cargo also from Petronas. Apparently, it serves as a test run to judge the viability of potential spot market LNG purchases in the future. This we read on thestar.com. According to Nikkei.com, Japan and Russia are set to launch LNG projects in the Far East in a move that may shift the power dynamics of the growing global LNG market. The parties are in talks to produce LNG from the Sakhalin-1 project. The new project will produce nearly a tenth of Japan's total LNG procurement. Bilfinger and Cryotech partner up in LNG sector to develop a concept for processing small gas volumes into LNG. LNG frequently is in demand at locations that are far from major import terminals. Accordingly, facilities that are able to produce the fuel locally in smaller quantities and to deliver it where it's needed will play an even more important role in the future. This is stated by gasworld.com. Japanese utilities face hundreds of millions of dollars in extra fuel costs in 2020 as they buy in extra LNG and coal, as nearly half of the country's working nuclear reactors go offline for government-ordered security upgrades. This is stated by Business Financial Post. The Philippines' planned Tanglawan LNG project is on hold. The temporary suspension comes after Udena, holding from Philippines, acquired a 45% stake in the Malampaya Natural Gas Consortium from Chevron. The authorities are evaluating if the asset acquisition will change the project's configuration and business model. The companies are reportedly reassessing a new concept that will most likely integrate the two projects. This we read on Callanish Energy. Canacol Energy has commenced the production and sale of LNG, the first such operation in Colombia. Together with Galileo Technologies, the company plans to replace diesel, fuel oil, compressed natural gas, propane, and other fuels with LNG, as we found on Finance Colombia. China's comprehensive import price index for LNG rose last week, according to Shanghai Petroleum and Natural Gas Exchange. The said index was only launched in October 2019 and is due on a weekly basis to offer new pricing references for imports. We read this on xishuanet.com. Last but not least, Woodside Petroleum has signed an agreement to supply liquefied natural gas to German utility Uniper for 13 years starting in 2021. And this we found on Seeking Alpha. That's it for this week. Tune in next week for more news, and until then, thanks for tuning in.